In today's episode, I want to take a closer look at the semiconductor company and see exactly what they do and will be doing for NVDA. The reason this stock received so much attention was because it has a market cap of about $1 billion. A few days ago, I made a video on Nvidia, and more importantly, I looked more closely at this article where AOSL is the new GB200 supplier leading beneficiaries of Nvidia's process certification changes. Many were wondering who is AOSL and is this a company we should invest in. Thus, let's begin with a brief price action and attempt to comprehend what they do and how they do it throughout this episode. I'll look more closely at their financial figures and most recent earnings, which provide a lot of insight into what they do for NVDA and possibly the AI space. Though most AI semiconductor businesses have seen considerably larger increases, the stock has gained by roughly 35% year to date. As a result, some investors may be asking, hey, is this undiscovered right now? Looking more closely, though, we can see that the stock has risen by about 88% in the past year from its year-to-date low. The company's stock has increased by approximately 15%. The reason we looked into this company was an article published a few days ago that stated AOSL is a new GB200 supplier and one of the top beneficiaries of Nvidia's process certification changes. Currently, AOSL supplies MOSFETs and power ICs for Nvidia's HEX/DHX H100 servers, and it is anticipated that it will become a new GB200 supplier. As many of you know, I'm extremely optimistic about Nvidia, the H100 and A200 platform, and other products, but the product that has me extremely optimistic is Grace Blackwell, or simply Blackwell architecture. To put it bluntly, AOSL is a semiconductor company that specializes in analog chips, much like your company's Analog Devices or Texas Instruments. At the moment, they have about 2,600 products, which is evident from looking at their catalogs. They also mentioned that in just 2023, they introduced about 60 new products, while in 2022 and 2021, they introduced about 130 and 160 new products, respectively, very similar to some of those other analog semiconductor companies that I mentioned. Additionally, they have their own internal manufacturing facility, which helps to expedite their technology development, manufacturing process, and overall supply chain assistance. And in their most recent presentation, if we look more closely, they kind of discuss how they have an in-house fat plant in Oregon, assembly and testing in Shanghai, a fabrication facility, and a kind of joint venture for these things. They also work with third-party foundries and subcontractors to do a little bit of everything right. So before we move forward, please subscribe to our channel to receive the most recent market updates. We also appreciate your unwavering support. In light of this, if you haven't already and are enjoying the content, please give the video a thumbs up. As I previously mentioned, they primarily concentrate on analog semiconductors, which are chips that can be used for almost anything. However, within the analog space, they really concentrate on what are known as power semiconductors, which are what assist drive the proper voltage and energy to a product. They've included a pretty nice image here that sort of illustrates how diverse the voltage and control levels need to be based on the kind of product and technology. For instance, a low-voltage power solution can be used for consumer electronics, such as laptops and phones. We can also see that there are things like GPUs in the low voltage and mid voltage categories, as well as other things like power tools, scooters, and AI servers. So we can already infer from the chip's location where its solutions are used, in GPUs, in AI servers, and in cooling systems, washers, freezers, and large items in the automotive industry, that their high-voltage solutions are used in. Thus, it's clear that AOSL has room to grow. We saw the AI servers and the GPUs, for example. But if you think that semiconductors will play a big role in solar energy-powered cars, this is another way that the company can profit. They also went into more detail about their products here, mentioning how servers and data centers are kind of in constant need of energy-saving products that are high-performing and drive a market for their medium voltage, 440 to 400 volts, and high voltage products. Currently, their list of strategic customers includes some that may excite investors. These customers include AMD, Dell Technologies, HP, Intel, Microsoft, Nvidia, and Supermicro. It goes without saying that if you are involved in the production of GB200, you will also be involved in many AI server solutions. Therefore, any company that constructs AI servers such as Dell, HP, or Supermicro will require your services. If you are optimistic about the GPU market at this time, not only in the data center space, but also in the consumer space, then there is clearly room for growth. Next, let's take a closer look at revenue growth. The company estimates that by 2026 or 2027, revenue will reach about $1 billion. At this point, I believe it is around 600 points. The company has experienced some slowdown in 2023 and 2024, but they believe that by 2026 or 2027, revenue could reach $1 billion. That's pretty interesting, right? Given that the company has a $1.1 billion market cap, I can understand why some investors might be excited about a price-to-sales ratio within the next few years. When they discuss growth areas, the two that I find most exciting are computing and power supply. Power supply is something that is currently being discussed a lot in the data center market and computing with AI servers and all those AI solutions, as well as the GPU market. However, there is another growing opportunity that I did not circle here, which is the automotive market. Based on their most recent earnings, which I believe were a few months ago, computing, which includes notebook PC graphics card servers and AI, accounted for 48% of this company's total revenue. Now that we've learned a lot, let's see if you are bullish in any of those markets and think they can grow from here. Personally, I'm super bullish in servers and AI graphics cards, not just for the consumer market, but also for the data center market. On the consumer side, we're kind of coming out of this slump in PC inventory, and we have that AI PC race going on right now, which can also be a nice added drive of growth for their computing market, which accounts for nearly 50% of this company's total revenue. We now know that the company produces so many goods that it is pointless to focus on just one of them. Instead, we may infer that their analog power solutions are utilized in many of the current growth-promoting technologies. I believe that we have a good understanding of the company's capabilities. When we look at the PE ratio forward to the end of the fiscal year, which is in about a month, we can see that they just released the third quarter, which means the end of the fiscal year will be in quarter 4, with a PE ratio of 61. That seems a little pricey and may turn off some investors. However, allow me to elaborate on why you might want to hold off on throwing it out just yet. The profits per share predictions for the following 2 fiscal years are currently about 0.50 cents. Moving forward 1 year, which is the next fiscal year, so it's roughly 13 to 14 months from now, is 53. That's still quite high, in my opinion. AOSL is currently trading at $37. Since the PE ratio is calculated by dividing price by earnings, we can calculate 37/1.5 to get a PE ratio of about 25. Based on this, I'm going to assume that most analysts are fairly conservative. Let's take a closer look at their overall balance sheet. We can see cash and short-term investments of $175 million, which is about 17% of their current market cap. Not horrible total long-term debt of about $41 million, so they have plenty of cash to cover all that debt-free cash flow. However, if this has the potential to grow here, these numbers might actually be pretty weak, so that PE ratio might be a lot lower than 25. Some investors might get excited about that potential growth. The most recent quarter had positive cash flow from operations, and as of right now, I think the market is going to start showing signs of a great increase once more. In the following quarters, we should see improvements in all those indicators. As for revenue estimates, we can see that this company is anticipated to increase revenue over the coming years, but keep in mind that they stated they could reach approximately $1 billion in revenue by 2026 or 2027. As of right now, analysts are only projecting revenue of roughly $764 million. Which is why, in my opinion, they are underestimating the company's potential for growth and earnings per share. The PE ratios that we have been examining may become much smaller in the future. Additionally, we should be aware that the CEO, Mike Chong, currently owns 14% of the company overall, which is a significant amount for a publicly traded company. Despite selling shares in recent months, the CEO still holds a large percentage of the company and is its largest shareholder. Lastly, I would like to examine the company's most recent earnings call, which for the third quarter of 2024 took place on May 7. After this, I want to think more deeply about my feelings about the company and how I would play it. He does, however, mention Stephen Chang, the CEO, who said that during the March quarter, they saw a rise in demand for newer applications like graphics cards and AI applications. He also said that starting in the June quarter, we forecast a rebound in gaming and continued strength for tablets with graphics cards and AI. So even at this point, he's already telling us that the AI market is undoubtedly pretty strong for them, and that's newer applications. They predict that the computing market will expand steadily in the mid to upper single digits thanks to tablets, graphics cards, and AI accelerators. Since he is unsure of their future course, I'm going to assume that he is also being cautious here. However, if they intend to pursue a listing in the GB200 in the coming years, I do think the year-over-year growth in their computing segment, which accounted for over 50% of the company's total revenue, can accelerate now. If we continue to scroll down, some other points I have highlighted include the fact that they are beginning to receive some business as a result of their success with graphics cards. This gets me pretty excited for the AOSL company, as there is this opportunity here in the AI markets. So now that I have provided all the evidence that I have for their AI accelerated market, one of their customers is essentially using similar solutions on their AI accelerators. I'm going to guess that this is either AMD or Nvidia, which are probably the only two players, maybe Intel too. But I'm going to guess this is more Nvidia of anybody, where they are doing really well in the graphics card market, and that's why they're kind of moving into the AI accelerators, because it's pretty much kind of the same product one way or another. And how they can help NVDA and offer solutions I just want to share. My general opinions about what I buy and sell are that this is one of those companies that, in my opinion, I would not consider to be a large portfolio. Instead, I would consider it a growth opportunity play, with Nvidia being a monster in growth. The primary reason for this is that, despite their partnership with Nvidia, Alpha Omega's product offerings aren't particularly strict, and even though there may be some technological differences, it is still possible for competitors to overtake them in the market. Therefore, in my opinion, AOSL lacks that kind of moat play. However, the play that it does have is quite comparable to Supermicro, which I believe has a moat in liquid cooling and other areas, but not necessarily too big of one. Their biggest growth, and the main reason they are bullish, is that, as AI grows at an exponential rate, the revenue of this little business might skyrocket, especially if GPUs and AI accelerators already account for a sizable amount of their overall revenue. Therefore, they can witness even faster growth, making this more of a growth bet in which, if I were to invest at max, I might do it with 2 to 3% of my total portfolio. Though this company obviously deals in other markets, and we can see the overall volatility, I definitely see the opportunity to play this now at current levels of $37.16. If I were to take a full position right now, I might take a quarter position to enter, and then dollar cost average my way in. The stock has increased by about 23% since a few weeks ago, and it has increased by nearly 25% in the last month. With volatility rising in one direction, it is possible that it will fall in the future, but there are undoubtedly chances here. I won't claim that this is my top semiconductor firm, but if you'd like to look more closely at a business that may be able to expand, and is perhaps a bit of an anomaly in the AI market that not many people are talking about, Alpha Omega could be worth a look. Please let me know your thoughts below, and whether you enjoyed today's episode. I know it wasn't specifically about Nvidia, but I do think it relates to the growth opportunities that we see with Nvidia. As I mentioned earlier, for me, a company with a $1 billion market cap that is highly volatile is not necessarily going to go bankrupt. If I were to open a position, it would be a small position. I would never make this more than 3% of my overall portfolio, or maybe even 2% of my overall portfolio. Let me know in the comments section below if you would want to see more businesses like this. Take care, have a great day, and I'll see you all again soon.